Hi, this is Michael O'Leary again from By the Book Taxes with this week's video blog. Once again, we're talking about the topic of innocent spouse relief. This week, we're talking about the second version of innocent spouse relief. Last week, we spoke about traditional innocent spouse relief. This week, we're going to talk about the second one under section 6015C called separation of liability. Once again, here is the legislative history regarding innocent spouse relief. Innocent spouse relief is a highly litigated area over the decades, controversial, a lot of challenges, and as a result, several instances of new legislation being written to update it. 1938, Congress enacts joint and several tax liability. 1971, innocent spouse relief was created under the IRS code 6013, simply because many taxpayers complained that there were inequitable outcomes resulting from both spouses being legally liable for all the tax on joint tax returns. Even though there was legislation passed in 1971, taxpayers still complained and litigated regarding what they felt was the inequity of the law, so that in 1998, there was more legislation passed as part of an IRS Reform Act, which repealed Internal Revenue Code 6013, created a new code section 6015, and laid out three different versions of innocent spouse relief. Section 6015B, which is the same as innocent spouse relief created in 1971, plus two new ones. Section 6015C, separation of liability, which we're talking about today, and Section 6015F, equitable relief, which I'll speak about next week. Okay, so here are the requirements for a successful separation of liability filing. And these are a little different than last week's. In this one, the requester must either be divorced or legally separated from the other spouse for at least 12 months or a year prior to making the separation of liability filing. The next three are the same as traditional. A valid joint tax return must have been originally filed by a married couple with consent, without threats or duress. There must be an understatement of tax occurred as a result of underreporting of income or erroneous reporting of expenses and credits that the requesting spouse had no knowledge of or reason to know, and the separation of liability filing must occur within 2 years of the IRS initiating collection activity against the requesting spouse. The big difference here is that the requesting spouse must have been either divorced or legally separated for a year prior to making this filing. Okay, here's a couple of changes from last week also. Last week, when we talked about traditional innocent spouse filing, an allocation of tax was made based on the income contributions of each spouse. With separation of liability, it's different. What the IRS does is basically take the joint return, split it into two returns, and calculate the tax as if instead of filing a joint return, each spouse had done a married filing separate return. So it's a separation of the tax liability, not an allocation of it. So now each spouse will only be liable for the tax on their income as if they filed a married filing separate return. The other difference between this and traditional, no refunds are available. So you get the reduced liability, only liable for the tax on your income based on married filing separate, but no refunds available. Okay. If you have years of unfiled tax returns, owe the IRS a bunch of money, not sure what to do, who to call, or recently got divorced or considering divorce, or currently legally separated and need some tax help, give me a call. I'm happy to help. See you next week.